March 17th, 2026, the date the regulation by enforcement has finally met an end. The release of the SEC and the CFTC joint landmark interpretation is the line in the sand that has been drawn, and there's no longer a speculation on where crypto is going to land. How much do you think that the market is ready to see all of this new innovation hitting at once?
I think that there's a population that's eager to see the tangible benefits of this technology.
And that's what we're going to be talking about today, is how utility is going to become king.
No other network has hundreds of thousands of transactions a minute, day in, day out, for years on end. Hedera has.
Today, we are joined by a man who has spent years preparing for this exact regulatory pivot, viewing the network not as a speculative sandbox, but as a 100-year battleship for global enterprise. That will be Gregg Bell, Chief Investment Officer at Hashgraph Foundry. March 17th, 2026 marked the date. The decade-long regulation of enforcement era is over, and it was pretty much just dismantled. This is a historic 68-page joint release by the SEC and the CFTC finally drew the line in the sand. And of course, this all centered around what some people are calling the Clarity 16. This is the first set of digital assets to be legally codified as digital commodities. Now, most likely we're going to see much more of this coming soon, but for years we've heard that utility is king. And I think now, in a post-clarity world, utility is now the law. We're going to get into all of that. Today, we are going to be joined by one of the men behind all of this. He's been building along with his team for this exact moment since day one. He calls his networks a 100-year battleship designed for enterprise-grade reality. That will be Gregg Bell, Chief Business Officer, joining us from the Hedera Foundation. Let's get started. All right, Gregg, the floodgates are officially opening, as last week showed us. So welcome into the show.
Thank you. Happy to be here.
Let's get into the first thing, and that, of course, is Hedera's position around utility, because there's a lot of people that may not completely understand the full functionality of what Hedera can do. And with utility being the focus of today's show, that has now transcended into a commodity under the CFTC guidelines. Explain to us and our listeners, viewers, how Hedera is a utility.
Sure. I mean, so many applications require a gas, right? And with Hedera, HBAR is that gas. It is the means by which the Hedera network can be used. And what we've just seen with this additional clarity in the SEC providing the determination that Hedera and HBAR classify as a digital commodity, that now institutions have the ability to hold the assets needed to actually use the network. So
Yep.
today what we see is the use of Hedera from a variety of different parties. I'll give you a great example. Hyundai and Kia, two of South Korea's largest manufacturers of automobiles. So they are utilizing Hedera for the recording of their supply chain for their auto manufacturing. Now, in order to do so, they have to have HBAR. They have to use HBAR in order to attest to every component that's going into the car. And they utilize this for greater information as to the authenticity, to the production of various carbon and other elements within their manufacturing, and creating an audit trail. And so the ability now for institutions to clearly and more easily hold on to HBAR to use the Hedera network is a watershed moment.
Yeah. Okay, so you just mentioned something there, and that is audit trails. This is something we kind of chatted about pre-show. Explain the leap that we'll take in on audit trails, because I think that's something that maybe not everybody completely understands. That's how real-world use cases are going to be applied, and of course, audit trail is one of the big keys.
Sure. So, when you think about what a decentralized network really does, it provides a computing environment that can provide clarity into the transactions that occur, right? That is what a digital audit trail really is. A lot of people think of this in terms of addressing the counterparty risk that you might have in a transaction. So moving a stable coin or moving a tokenized security or moving a utility token around, you know that there's not a double spend because you
Yeah.
have that audit trail. Now you can similarly apply that same process to a digital twin or information that is being attested to. So we see that in terms of the applications from AI. We see that in terms of applications from audit trails in institutions. And of course, we see that in the financial sector with moving tokenized securities or tokenized deposits and things of that nature around. But ultimately, they are dependent on the trust that is embedded in an audit trail. And this is what a DLT and what Hedera is really, really powerful and good at,
Mhm.
is at scale enabling a tamper-proof audit trail that is compliant for institutional needs. And all of that runs based off of HBAR, based off of the gas of the network. And so you can't really use Hedera without having HBAR. And
Yeah.
so the that clarity and the ease by which now an institution can hold on to HBAR opens up more avenues for the use and utility of the network itself.
So, okay, so let's go down that, kind of that trail for a minute. You've given one example there with Hyundai, this huge auto manufacturer. What would be some other use cases that you think we'll see fairly quickly now?
Yeah, so we're already seeing it being applied in the AI sector. And so there is company within the Hedera ecosystem called EQTY Labs. They have a product that is being sold by Accenture, and that product provides an authenticity trail, an audit trail for AI compute.
Okay.
And you see this embedded within the silicon of Intel and NVIDIA chips. These are the chips that are running all of the LLMs, whether that's OpenAI or Anthropic or others. And that enables both a trust in the compute that it occurred at a specific location. It enables trust in the data sets and an audit trail. So this is going to be one of the most profound things that we as a human race will have to deal with into the future in terms of how we interact and how we trust AI when it moves from talking to us, which is the prominent way that most of LLMs are today, versus being authorized and credentialed to do things, to spend money, to execute transactions in the real world. And that is the transition that many are going through today with agents. We see institutions that are bringing agents onto their platform, digesting their own data sets to be able to act like an employee. To do that, you have to have trust that a new digital employee is going to abide by the regs and rules of an institution, that is not going to go rogue and hallucinate and access or do things that are against the obligations of that institution. So there are a number of different safeguards, and the tools to do that are first and foremost based off understanding how that compute works. And so an audit trail of what an agent or what an LLM does is immensely valuable. We're seeing this deployed both in the public network as well within Hashspheres, which are Hedera's private network instances. And so I like to make the parallel of the internet, Hedera, to the Ethernets of Hashspheres, which enable the combination of privacy and the attestations of an immutable network within Hedera.
Okay, so mainly what you're saying is all of AI is going to have this at some point down the road. We're going to see this just embedded into everything. Obviously, with equity and what they're doing with NVIDIA. Okay, so why have we not seen anything like this coming out of place, especially with Elon, what he's doing with XAI? This, I would think, would be a huge benefit for anybody utilizing that AI. And if you look at the way that companies now are signing these figure deals with many of these AI companies, and I'm talking about Fortune 500, why aren't we seeing more people quantifying that this has AI audit trail traceability built in?
Well, I think there are various layers. First, it's understanding the benefits that a AI or an agent or LLM can offer an individual or offer a corporation. I think that more and more that's becoming very clear. Now it's bubbling up to the chief compliance officers, the CEOs, the execs within
Okay.
firms and saying, how do we onboard this? And that's where firms like Accenture are coming in and saying we've got solutions. Now, the LLMs or the companies that are bringing these agents to market themselves, um, that is at a different layer than the chip layer that we are
Yeah.
discussing, right? The chip layer is actually the NVIDIA or Intel compute, the silicon, right, that is running each of these LLMs. So
Okay.
it's a more foundational layer.
All right. Okay. So I want to get into payments here in a second because I know you guys do some things around that, especially around the side of Rails, but also how that correlates to stablecoins. But before we do that, I want to take a minute, guys, and just invite you to join the Barron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. And we have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Barron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access. You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing, so check it out. I want to get your take on the fact that we actually had the SEC now under Atkins has shifted from everything as security now to a 5-part taxonomy. What is your take, or at least interpretation now, of this? Rather than a single agency ruling like what we've seen in the past, now this is kind of a double whammy where projects that used to get caught in the crossfire between the two agencies now seem to have much more clarity. How important is that?
It's immensely important, right? Everything I think is a trade-off between risk reward. And the risk was so heavy in the prior administration in terms
Yeah.
of the SEC that there was the inability for institutional adoption, which is why you saw, most of the adoption being led by retail within
Mhm.
the applications that are deployed within the blockchain ecosystem. But that also limited the types of applications. So having the clarity from both the CFTC as well as the SEC within the US enables global adoption, quite frankly, because people look to the US as a leader. And a lot of the market infrastructure that is being put in place will be
Yeah.
adopted globally. And so it changes that calculation around the risk reward, right? All of a sudden, they're saying, I can seize the benefits of this technology and doing so without, putting undue risk to the organization. Now, that's not to say that all of the various networks are the same with that risk calculation act. In fact, I think they are quite different. And the industry as a whole does a very poor job in defining new terms, in speaking truthfully about the various attributes of these networks. And so, I applaud shows like yourself that try to draw out some of the truth in terms of how networks differentiate themselves because there are different trade-offs. And when
Yeah.
we talk about institutions, especially the globally systemic financial institutions that are rapidly onboarding to Web3 technology, they're embedding new risks. They're not embedding, AML is still AML. Sanctions is still sanctions. However, there are new attack vectors. And so the choice of network really is very important here in meeting the obligations that I expect to remain in place around the fairness, around protecting consumers, all of the regulation that exists in the banking and financial sector, whether that's stablecoins or securities.
Yeah, for sure. Well, you look at this, at least the first 16 that were listed because it was a such as statement. I do agree with that. Bitcoin, ETH, Solana, XRP, HBAR, Cardano was there, AVAX, I think Link, Dot, XLM, Litecoin, Bitcoin Cash, or BCH, yeah, and then Doge, Shiba, and I think even Aptos was on there as well. So when you look at that group, okay, first of all, why do you think that group was selected first by the SEC and the CFTC? Because they could have also went near protocol. There's several others that could have been included but weren't. Why do you think it was?
So most, if not all but one, I think Link was included there,
Yeah.
are layer ones. So I think that there was a, a preference for the layer one networks, which have a very clear utility for the underlying cryptocurrency. Like the HBAR is required in order to utilize Hedera.
Right.
And so that was a critical component. And then I think they were looking at the infrastructure pieces that were needed for the adoption of Web3
Okay.
by large scale institutions. And there is diminishing value in a number of different forks of various networks, a number of different twists of a particular recipe. I know Hedera is the unique consensus algorithm. It was designed specifically for scalability, designed specifically for meeting the enterprise needs of both the financial industry as well as Fortune 500 companies. And so it was no surprise to us that Hedera would be included in that first list.
Yeah, for sure. Well, it's one, we've looked at for a long time in terms of its ability of being a true utility. And if we are entering a phase where it's kind of survival of the useful tokens down the road, and the CFTC has kind of already somewhat set this in place, what would you say would be your killer component outside of what we've just talked about in terms of AI auditability? Uh, what about RWA, enterprise RWA? I'm looking at your website right now. Modern payments need modern rails. This is where you get into DLT. And then, of course, the integration in stablecoins. Explain to me those two areas of where Hedera fits in.
Sure. Well, I think the applications currently that are most tangible are those that are within the financial sector. Um, and what we'll see there, and when in the past, I referred to sort of the battle of the layer ones, or the battle of the various protocols.
Hmm.
When enterprises adopt this technology, and I don't think that they're choosing just one. I think many of them are saying we don't know the right solution, and so we're adopting several. But they will experience the difference between those that are scalable, those that expose them to undue risks as it relates to node operations. For example, Hedera
Yeah.
has, all nodes are run and operated by Fortune 500 companies, so they are known, they're not anonymous. And so a financial firm doesn't run the risk of having a transaction between two known clients being validated by a party in North Korea. Those types of risks will become very evident as networks and as institutions adopt. I think the performance and uptime will become very, very
Right.
real and noticeable. You see that with both the exposure that we had previously to, as an industry, to AWS. AWS went down and many networks went down. You saw outages from Base, Arbitrum, Lena, Polygon, and then you have seen congestion. I think congestion and the fee models amongst networks are very, very real. And often people don't associate congestion with the fee models, but they are very
Mhm.
closely tied. What you see is that most protocols have economic disincentives to transact, meaning that
Yeah.
when there's a lot of transactions, when then people want or institutions want to use the network, the fees go up. And typically, I'm not talking about, you know, 20%. They go up 1,000x, 2,000x. And that is designed specifically to address the inability to scale. That is designed to make it economically less interesting to transact, and Hedera doesn't have that. Hedera has fixed fees. They're predictable, they're low, and they're fixed because it has the ability to scale. No other network has done hundreds of thousands of transactions a minute, day in, day out for years on end. Hedera has. And so that proven scalability will be vital for use cases that require that. And typically enterprises do, especially when you get to securities and collateral mobility type of examples, which a lot of people talk about. Collateral mobility is really the sense of how do you address counterparty risk? How do you move collateral from one party to another intraday or intersecond if there
Mhm.
is a concern within the markets? Well, those concern periods happen when there is congestion, when there is macro events. These occur at the same point in time as you've seen downtimes in various other networks or seen prices go through the roof. And so Hedera really will differentiate itself quite materially when those types of environments are assessed. So we feel that is not only meeting the regulatory and AML requirements for financial firms, but it's also meeting that scalability, that performance, that uptime. That's what you expect from an enterprise chain, one that is run by enterprises and designed for enterprise use cases.
Yeah. Well, and I think the component that you have to consider now is maybe we're just entering an era where there's going to be, and this happened in other major technological shift eras, and that is where there's massive shakeout. And if you just say the words and say there's probably going to be thousands, if not tens of thousands of tokens that don't fit these taxonomies, they're immediately going to fall into the security category, which is creates a whole new layer of infrastructure and issues for many of these tokens. What do you think that's going to look like? Because if we are nearing a phase where maybe there's 100, 200 projects, I mean, I remember the day when crypto was that way. What do you think that is going to look like for an investor? Is it going to make it everybody is finally just going to kind of come to agreement that hey, these are the projects that we're going to invest in. Everything else is either meme coins or speculative, or I'm going over to prediction markets. And that's a different kind of investment, if
I
you want
would
to call it
expect
that.
it to mirror what we see in the equities markets, where there's blue chips like
Yep.
Hedera, there's small caps, and then there'll also be penny stocks. And so you'll get that sort of separation of
Okay.
the assets. Now, I continue to believe that there will be a vast number of tokenized products, whether those are associated with a particular industry, a particular
Yep.
company, a particular product. We're going to see more and more tokens, but they'll be built largely on networks. And so we're really excited about some of the utility tokens that are being built on Hedera as well. That hasn't been particularly an area of heavy focus for Hedera as a network, but there are a number of assets that have been built. And then there are a number of different securities and things. All of these, however, require HBAR as the gas to facilitate. So I expect to see greater economies of tokens, but the clear differentiation between blue chips and small chips. Or
Do you, okay, so you're throwing out a little bit of a crumb there, Greg. I got to ask you the question. When you talk about companies or projects that are building inside of Hedera, where do you see the potential for maybe a breakout? Somebody or something, whether it's project, use case, etc., that would really accelerate. We've seen it on Solana. We've seen it in some of the XRPL projects.
Mhm.
There's been a handful. Obviously, there's been dozens on Ethereum, but what about on Hedera?
Yeah, I think it's going to be those that really find the product market fit, and that also aligns with the core strengths of the technology. And so with Hedera, those that can really leverage the speed, the performance, the fixed fees, the interoperability that is embedded within the ability to move from a private hash gear to a public network and
Uh-huh.
public networks. Those will be very, I think, a powerful elixir. And so I can, there's a number of different companies that are pursuing those types of strategies and finding the products that fit well with the strengths of the network.
I'm curious that, because I don't know if you've been watching what's going on with Sora and OpenAI. Have you been following that much?
Not myself.
Okay, so and it's kind of the video engine, I guess, of OpenAI. The problem has been the cost to maintain it, or social, I guess, to a certain extent. It's basically where it's creating videos in AI, being able to distribute those. But I look at it this way: obviously, us being in media, we see so much of our content that is either copied, recreated in AI, and in many cases gets even me to say things that I didn't actually say. So there's an authenticity problem that's already existing in media. I kind of I'm curious, why wouldn't something like Hedera be used to authenticate, proof of media? in something of this nature. You're already doing it at the
I
chip
mean,
level.
it's an incredible use case, right? And I think
Yeah.
that, the next trillion transactions are going to be AI driven. That is very clear as the
Yeah.
UX changes from being a black screen or computer that a person is driving to an agent that is driving. Now all of a sudden you need that verification layer. You need that trust. I mean,
Yes.
Hedera is the trust layer of the internet. It provides the ability to create that audit trail, to do the trust but verify, show your
Yeah.
homework. And so, that can be applied to so many different things. We talked a lot about the financial use cases, and of course the enterprise use cases as it relates to supply chain and understanding their customer relationships and what goes into their manufacturing products. But it is equally applicable, or if not, has greater overall value in the AI space in terms of
Yeah.
providing that same information. So when we have a world that trust and authenticity become scarce resources, and I think that's rapidly where we're heading because of the ability to generate content so quickly and so inexpensively. The content that's going to be on X, that's going to be on the internet, is going to be less and less human generated, and that has material impacts in terms of how we validate information.
Yeah. And it starts to create a whole new layer of what ifs, because that's kind of what happened in the early stages of, the internet boom. Many people just didn't know how to use it yet. So it ended up creating a lot of new products and cottage markets that just absolutely exploded. And many of those still exist today. So I think that's what we're probably maybe at the dawn of right now, at least what's going on with blockchain. So let's go over to post clarity, because the word out on the street right now is there might be a deal in DC. Clarity looks like it's going to go through. We don't know what it's going to look like. They're kind of being somewhat secret about it. But if you look at it going through, this puts you into an institutional floodgate zone, because it would open up things like HBAR trust. If you think about what's going on in the ETFs, because these are no longer, they would be no longer speculative. These would be retirement safe accounts type thing. So, how much of a first of all, how much of an impact do you think true clarity will make, and how long do you think it will take before the market finally accepts it and says, "All right, these are the investment vehicles we're going to go after"?
The timing is a tough one because it always takes, the onboarding to new products, so the onboarding to uh, adjusting a risk framework takes time, but
Yeah.
it's I don't think it's multiple years for that type of adoption, and there will clearly be first movers that will immediately take the new risk calculus based off of clarity, and I think they will reap the rewards. Um, you know, it comes in both in terms of, I think, how you use HBAR, how you use the asset, but also then how you gain access to it, right?
Yeah.
The
Yeah.
access, I think, is one of the things that really changes. Of course, with HBAR being the third asset after Bitcoin and ETH to be listed as an ETF in the United States, that was earlier this or late last year,
Right.
that enabled a new access point, and that will continue, I think, to be a viable access point for many people that are going through brokerages and other accounts. As we get greater regulatory clarity then and market infrastructure, then it's a new access points for institutions. And the one that I'm really excited about is those that are actually going to leverage the technology, not just as an investment,
Yeah.
but leverage the technology to utilize the networks. And so that utilization, I think, is where you're going to really see the the adoption, the stickiness, and the benefits that distributed ledgers ultimately bring to corporations and to individuals in terms of that audit trail, that trust layer, that additional ability to address risks from counterparty perspective, the creation of new smart contracts that can manage portfolios or manage investments in a new way. So that has been demonstrated in a retail capacity on a variety of different networks, and now it's going to be placed in the hands of institutions that will drive scale And that I think is really exciting.
You talk a lot about connective tissue from blockchains, and that's likely to be maybe classified as digital tools, maybe in the Clarity Act where it's a subcategory kind of thing, or eventually it could transition. I'm just curious how that could possibly transition into a commodity. Because if you look at Chainlink, it's on the list as a commodity. You'd have to think that maybe something like any Oracle class, blockchain, Pith, others that potentially could be logical successors. Then you get into the DePIN wave, which is, projects like Helium Render, etc., that could flow into that. How much do you think that the market is ready to see all of this new innovation hitting at once? Because with the internet era, there wasn't regulation holding the dam up. There was a lot of stuff happening all the time. Now, everything is gonna be hitting the market at one time. Do you think there's just gonna be too much noise?
I think that there's a population that's eager to see the tangible benefits of this technology, and that will be very evident when they are packaged and available through institutional relationships. And
Okay.
so it's going to change where the utility is going to be playing a much bigger role in consumers and enterprise in the lives of participants, right?
Yeah.
Than the financial aspect of it in terms of the investment. Now, as these a lot of the access points are already there, right? The exchange listings, the ETFs, etc.
Yeah.
There will be more, I would suspect, and I think the way that the access is integrated into various brokerage and into various banks will become more expected and demanded by populations, and there will be a lot of choice.
Yeah.
But I
Yeah.
think that's never been a problem with choice, well, certainly in developed nations, in developed markets. And so with choice comes index products, right? Comes the ability to have broad exposure. And so that's where I think we're still only just scratching the surface in terms of some of the products that provide greater broad exposure to thematic areas of investment or to a particular, individual solo names. Solo names is where we are today with some of the ETFs. I would expect more passive index type products
Yeah.
to come
More
through.
baskets. Yeah, for sure. Well, and also I think there's gonna be, a checklist of companies, especially for you guys, because your governing council is like the who's who. You know, if you look at a Google, a Dell, and a Hitachi, now they're capable of integrating HBAR into their balance sheets. So you're now getting a commodity built into a balance sheet of basically a Fortune 500 that is utilizing it as a tool set or a utility. That to me starts to create a very interesting checklist for investment, advisors of, okay, this is another one we want to put in that basket or in this group here. So that looks like, especially because of the alignment with your governance council, I think is brilliant. That's going to pay off, I think, long term for sure. Any plans on expanding that council?
I think that there is absolutely interest in growing the council. The way that individual firms are added to the Hedera Council is through the vote of the other existing members. There are
Mhm.
uh, continuous efforts to and review of potential applicants. And so I would expect, there to be new governing council members added, and I would expect there to be the potential maybe for, expansion beyond what was originally deemed as a list. But, the first step is filling the 39 that
Yeah.
were envisioned by the founders. And with the latest, of course, being FedEx, the global logistics firm. I think that their addition is incredible because they view uh, their business in a very
Okay.
similar way to Hedera, right? From if you were to take a global perspective and remove the borders that limit commerce, that is what FedEx does very well. They enable their packages and all of the logistics to occur on a global level, and that aligns perfectly with Hedera in terms of the way that information, value, and data can be transacted on a global basis.
Yeah, yeah, and I think this, this 5-part taxonomy, as it continues to build framework around this, for projects to come in, because there's a lot of, key things. Obviously, the value comes from the code. Not, I think the CEO was one of the key elements. You can use the token or the asset for a service today, which is where you guys fall into that. And then no single entity shutdown, which is huge because that affects change the supply side. And then obviously the thing that everybody's concerned about, I know on the XRP side, is the founding team holds less than 15% of the supply. So that is going to get interesting pretty quickly as we get going here. So things are about to change here, Greg. We're going to keep a close eye on all of this. It is a very interesting time. So Greg Bill coming in from Hedera. Thanks for stopping in.
Thank you.